Welcome to the Results Driven Podcast. Today's guest is someone who built an 8-figure empire by doing things most real estate investors avoid: dialing in their financials, building smart systems, and creating a culture of operational discipline. I'm joined by Casey Quinn, a former CPA turned serial entrepreneur who scaled from $0 to over $115 million in assets and $40 million in revenue in less than 5 years without raising a single dollar of outside venture capital. He's the founder of Acruity, a financial firm that provides bookkeeping, QuickBooks, accounting, and back office advisory for high-performing real estate investors, as well as a powerhouse behind City Life Residential and Steel Point Capital. Casey's built his portfolio using creative financing, the Burr method, and other people's money. But what really set him apart wasn't just his strategy. It was the structure behind it, the culture, the numbers, and the systems. Get ready for a no-bullshit tactical conversation about what sloppy financials are really costing you, how to structure your back end to scale, and how to build a business that actually sets you free. All right, so let's talk about the cost of not managing your books as a real estate investor. I know that you own Acruity, and for anyone listening to this, we have lots of students using Acruity and Results Driven, and we are seeing people make lots of mistakes when it comes to bookkeeping. What are some of the most common mistakes that you see?
Yeah, I mean, I think you could take it a lot of ways that from a mistakes perspective, because people make wild mistakes in general, right? But I would tell you at the highest level, people just not doing it, not caring about it, right? Out there selling, out there being entrepreneurs, out there doing real estate deals, and then just kind of transacting and not really understanding that accounting is the language of everything they have going on. They ignore it all. They don't track it all. It's not getting into the systems. And so then like year end comes, some people we see to haven't filed taxes in 3 or 4 years. Well, like number one, you can't actually go out and get loans. You can't do business without tax returns. And so obviously your growth is going to be completely stymied. You're only going to be wholesaling forever. You're not going to be able to build real wealth without filing taxes, right? And then you kind of get more to the granular side of if you're not doing those things, how are you actually understanding how you're performing, right? Like if you're just measuring, do I have money today to go buy my Starbucks or not? Well, like, what are you really owing? What do you owe and how do you grow? Where can you invest more in marketing, buy more real estate, do different things in your business? If you're not tracking all that, using it then to make decisions, right? You're really hurting your growth because you're not learning and understanding how to run your business through those financials to make the decisions, to be able to know where to spend money, where not to spend money, what vendors to be using, a marketing spend, right? Who to be, or your transaction coordinators doing a good job, all of those things, right? And so transacting and understanding the language side of it or the dollar side of it and everything they're doing, right, is going to allow you to make great decisions. I know you use them more than you could ever imagine to make your decisions, and you don't make decisions without them anymore, right?
Yeah, so let's go back to the mistakes I made back early when I first became a wholesaler flipper. So here's where I think the root problem is, right? It's our educational system in general, because when someone starts a company, it's not like we were educated in high school much around accounting. And I even went to college and had accounting classes, and I still, I just did whatever I could to memorize to pass a test, right? And so it wasn't like I was groomed to understand the importance. So I think what happens is a lot of people jump in head first, like all of us, just figure it out. And we don't realize what the numbers actually do for us. So we don't prioritize it because we think, well, we just need to make money right now. Mm-hmm. So when I first got started, I was in a program that had some level of like actual modules on trying to teach you how to do it yourself. And so I was like, oh, I'm pretty smart. I can do this myself. And I watched the modules. And then what happens is, especially when you first start a company, you're running around with your head cut off. So like you're the acquisitions, you're the dispo, the TC, doing inspections. And so you keep thinking, oh, that's not important. It doesn't make me money. So I'll get to it later. And so it then becomes a domino effect of problems in the sense of, okay, I remember getting like my first 15 deals done, and I'm thinking, oh my gosh, I don't have my books updated. I had no idea if I was making money or losing money. Yeah. And like in my head, I'm thinking, I think I've made money, but I really don't know if it's like 10 grand or 100 grand. And so what I ended up doing was I hired this local bookkeeper. I put out like a Facebook thing or something. And I realized really fast that if you're a bookkeeper, but you don't know real estate bookkeeping, that's also
especially if you're keeping the real estate, right, in your balance, because real estate is held on the balance sheet, which is very different than your profit and loss.
So I didn't know how to vet them. I didn't know how to interview them. I didn't know anything. And I would have him come to my house every Monday, go in my basement, and I'd hand him a thing of receipts and be like, here you go.
Yeah.
And unfortunately, a year into the business, I remember like a month or two in, I was like, wait a second. Yesterday I was making 60 grand and now my books say I'm losing 20. What the hell's going on? And he clearly didn't know what he was doing. So the whole year I'm making poor decisions.
Yeah.
Thankfully, I didn't have a team yet. And I then pay my CPA firm to go, I unfortunately had to pay them 10 grand to go figure out what the hell was going on. Then we find out through the cleanup phase that he also was stealing my money.
Oh, wow.
So he was going in and taking like $100 and $200 out at a time on PayPal. So like I wouldn't really notice, because back in the day, we would like PayPal vendors or whatever. That was like a way to pay people. So anyways, not only did that obviously cause lots of stress, I paid 10 grand to clean them up. I didn't understand the importance. I definitely wasn't making money on or decisions on data because I didn't have accurate data. The biggest thing though is it prevented me from growing the company because I didn't feel confident that one, I could afford people or more marketing or more systems. I didn't know if I was making or losing money. And then I knew that if I hired someone and say I paid them on commission, I was like, well, I don't even know how much money I'm making per deal. And I don't know it fast enough to pay them accurately. And so I can't imagine the millions of dollars that I just missed out on as well.
Without a doubt.
Without just moving the needle forward with my company. And unfortunately, so many people in our industry see books as like, it's 800 or 1,000 a month or whatever it is if you're smaller. And you're like, I'll get to that one later. I'll do that after I'm making more money. But the reality is it's like saying, I'll go to the gym once I get a six pack. Well, no, you got to go to the gym to get the six pack, right?
Yeah. I think too, to your point, right? It's because of the industry and what has been put out there over time and what has been taught, where it's almost, a necessary evil in the industry, right? Oh, I got to get my bookkeeping because it's got to go to tax and it's a legality thing that I have to do. When the reality of it is, it's totally opposite of that, right? And to your point, there's so many bad bookkeepers out there, so many bad quote unquote fractional CFOs out there that say they're going to help you when they don't, right? But what it is you have to do those things, but you have to weaponize it, right? That's the biggest piece to all of this is you have to weaponize it. So number one, you have to learn and understand it, right? Having somebody just do it is half the battle. The other half is actually diving in, getting involved and understanding what they're doing and then how to use what they're doing to better drive decisions in your business. To your point early on, right, like a couple of the key KPIs that I always talk about that are really important financially, right? Everybody wants to know, what are we making? Well, guess what? How do we make money? Two ways, right? We either spend money to make more money or we commit time to something to make more money. Our goal in the business always is less time, right? Create less time leverage by spending more money, whether that be lead generation, whether that be people, right? Whatever it is, we're either spending money or time. Well, the key is, what is the return? So what is the return on our time? That's easy. What is our hourly wage, right? Or if we're doing a deal, we're getting a one-time deal and we did it all on time, we make 20K, how many hours? That's our return on our time. Simple. Same concept with money, right? If we spend money today, how much is it returning us? Every dollar that we spend should be looked at as an investment for a return on the investment. Same with your accounting spend, with your lead gen spend, all of those things. What is it returning us? But the bigger key to really help drive decision-making is, when is it going to return to us and how much more than what we spend, right? Because if you spend 10 grand today and it's going to return you 100 grand, right? Great. Why wouldn't you? But what if it's going to return you 100 grand in 2 years from now? Would you still do it? Maybe, maybe not. Do you have the 10 grand, right? Number one. Number two, can you do something better that can return you more than 200 grand over the next year or 2 years, whatever that time is? And so we call that cash conversion cycle, right? CCC is for short, which is understanding when is that money going to actually come back to you, the investment. What that allows you to do is then really understand what the return on is. Same with people, right? What I always say is elevate, delegate, and elevate, right? Because people can have the highest return, but it's the most challenging because it's the biggest unknown, right? When you spend money, if you dial in your KPIs on, a paid per click, lead or a mailer, you can ultimately do the math that says, how many mailers do I have to send to get contracts, right? At the end of the day, with KPIs in between that, right? Operational KPIs to get there. We know that. When is the deal going to get done? We know my cash conversion. That's easy. But the moment you hire somebody, right? You hire an acquisitions manager or you hire a CFO, right? They're going to start doing and adding value to your business and returning capital to you but how much they return can be amazing, right? It could be unlimited. It could really triple, quadruple the value of your business, right? Or free you up to go do more things. And so evaluating the investment of time and dollars into what it is and the return of it is the ultimate. And so for me, it's always been about understanding the basic KPIs. Then how do I leverage people to create, multiple X returns on that investment in those people, right? Same concept in order to scale the business.
Let's dumb things down a little bit,
Yeah.
right? Because I want to talk to someone that's like maybe a year into the business or two, and they're just trying to like get basic KPIs started.
Yeah.
And I can tell you one thing, if you are not keeping your books updated, there's zero way, right, that you are planning your marketing dollars correctly, because that means that you're just literally going. This is what I see most investors do when they want to go launch a marketing channel. They learn it off of Guru or YouTube or something. They go to their bank account and they're like, I think I'm willing to spend $5,000. And they take this $5,000, they throw it at a wall, and they're like, or at a couple cold callers. And then they wake up and like, I don't understand why I'm not getting $100,000 a month. Yeah. And I'm like, that's not how this works. Yeah. So if you could paint the picture of what should their financial system look like on a basic level to start.
Yeah. So, I mean, again, not going in the KPI side too much, right? But the KPIs come on the back end of having your financials dialed in. So what that means is essentially saying, what is happening in your bookkeeping business? What does your chart of accounts look like, right? So chart of accounts is a big buzzword in the accounting world, which is where are we classifying, coding every dollar that we spend, and understanding where every dollar. So if we go spend money at a mailer company, right, making sure that it hits the right line item every single time you spend it, so it creates consistency. So that then you could track on a monthly basis and trade trends around exactly what it is that you're spending money on and how much you're getting in return, obviously through revenues, right? But that is the biggest basic concept that it needs to happen fundamentally across any businesses, is creating a consistent chart of accounts of which every dollar that you spend, every single penny that goes out the door, needs to then be tracked into those chart of accounts. You need to reconcile that every single month to make sure that they're accurate and making sure that they're complete, right? We don't want to be in November talking about transactions that happened in February. Why? Because it's too late to make decisions, right? You want to be as real time as you possibly can. And so the more you have your chart of accounts dialed in, the easier it is for your accountants or for you, if you're a small business, to be able to go in and say, okay, hey, I spent money on mailers. It's very easy. This goes to my marketing advertising line.
Let's back it up even more than that.
Yeah.
So chart of accounts might be foreign to people.
Yeah.
And so, and I know it is to most people, actually. It doesn't matter how advanced you are. And this is what I always tell everyone. So let's flip the switch and talk about transaction coordinating. It's no different, right? If I am a 1 or 2 man show and I'm getting on the phone, right? I wake up, I get on seller calls, and then I lock up this deal. The first thing I'm doing is probably going out to the property, doing this walkthrough, doing inspection. I'm calling the title company. And I want you to ask yourself, if you're listening to this, of how many hours a week am I transaction coordinating, or talking to a title company, talking to a buyer, walking out to inspections, and then say, okay, if I took that same hours, call it 4 hours a week, 10 hours a week, and I was on the phone with sellers more, do you think you would get another deal a month? I ask that question all the time, and the answer is always yes. Okay, so most people's deals is worth $10,000, $12,000, $15,000, $20,000. And I'm like, okay, so where's the logic behind outsourcing this to an expert, right? For inspections, it should be licensed inspectors, $150, right? The transaction coordinator, you can go to Easy REI, get that outsourced for $500, and guess what? You're even going to break even when you put it on your assignment. With your books, it's no different. It's actually even worse with your books, because transaction coordinating, I can probably learn. Books is like, you need the skill set, the know-how, and years of experience to get this done right. And you'll always be stuck where you're at today if you don't have your books updated at least every week, in my opinion.
Yeah.
And so it gives you clarity around what's happening on your business. It gives you confidence around, do I have money? Am I making money? Am I not making money? It helps you sleep at night, right? And all those things give you the energy to keep the business moving forward. So if we just take it back to the basics of time and the value of time, this is one thing that I would say there is zero real estate investors that should ever be doing their own books.
Yeah.
And I know from experience, because I screwed myself over for 2 years doing this wrong. And the only way you become consistent and predictable in real estate is through deal flow and consistency, right? So in order to get consistent deal flow, I need to hire a closer. And what holds people back is they're books are a mess. They don't know if they're making money. They don't know if they can afford the person. And so they just keep hesitating. And then another 6 months goes by, another 6 months goes by, and then they never grow. And then they wonder why they're stuck. And then the other thing we've been seeing a lot lately is people coming in and they don't have their taxes for like 2 years. I'm like, how is that? Don't you go to jail for that? Like, how does that work if you don't file taxes?
Yeah, you don't necessarily go to jail. Now, if you're committing fraud, it's a totally different story, right? But if you're not, it depends on the banks, right? So banks require tax returns. If you don't have any loans, right, no one's requiring to do it as far as the government, right? And technically, if you don't make enough money, you don't have to file taxes. But yeah, technically, it's not even necessarily filing taxes. It's making sure that the government has your money, right? And so technically, if you're paying the government estimates, or let's say you're a W-2 employee and it's being withheld from your employer and they're paying it, as long as you're within 90%, generally speaking, they're not going to come after you, right? And obviously, depending how small or big you are, the bigger you are, the more money it's worth, the more it's worth to them, right? And they have their systems on how they do it. Yeah, but it's certainly against the law. But is it jail worthy? Not for our everyday American like you and I and most folks. Maybe, as you get bigger and grow your businesses, it is.
So I would say we have a handful of people that I know of, probably more than that because I'm not on every call, that are like, they want to move their business forward. They want to invest in it. And then they make the decision finally to take their life where they want it to go. They go apply for funding or do something. And then they're held back because they haven't done their taxes.
Yeah. Yeah. I mean, without a doubt, right? If the name of the game is to create freedom of time, right? Otherwise, what are we even doing, right? So how you create freedom of time is getting more money, getting more financially free so that you could spend and pay more money than spend time on something, right? In order to do that, generally speaking, you have to leverage or you have to do really good in order to grow your business. Well, in order to do that, you need tax returns to do that. And so anybody thinking that they shouldn't file your tax returns because you've gotten in trouble, that's what happens generally. Like I missed a year, or some things happen and they just want to put it off, right? It's almost the dumbest thing you could ever do, right? The moment you make any money, it's so important to get your tax returns filed so that you're up to snuff, so that when you're going to those masterminds, when you're learning how to actually go make real money, that you're fine on the back end so that you can now leverage the money, leverage time, and leverage people to build wealth, which is going to create your financial freedom. And people, for whatever reason, love to ignore it.
So we did a survey in our community recently, and one thing that kind of shocked me was how many people said, yes, I did taxes for 2024, but no, my books are not updated for 2024. So what risk do people have when they go file taxes and then they eventually like catch up their books later on and realize they probably didn't file it right?
Yeah, I mean, it's a lot of risk. Now, the risk from getting an audit from the IRS and getting in trouble and owing them a bunch of fees and stuff is relatively limited because, right, there's millions and millions of tax filers every year, right? If you're doing that, you're probably not big enough where you're going to hit radars and you are filing, right? So that's less risky. But the problem is you're leaving money on the table. I guarantee it, right? Particularly if you're a real estate investor, you're making money. If you're paying anything, right? The big argument that I made to everybody, like I do quite well, right? Like you read my bio in the beginning of this. I haven't paid taxes in 4 years and I will never pay taxes again, right? I save millions of dollars in taxes, right? Every single year, not every single year, but in totality, hundreds of thousands of dollars every year right now, because I understand the financial side of things, because I actually have my books up to date to understand, oh crap, right now it's, June. And if I don't understand my situation, I don't have my bookkeeping up to date, I'm not getting reporting and understanding my forecasting to say, what am I going to make at the end of this year? In order then, what will I pay in taxes? Right. And then I work backwards and say, oh crap, I'm going to make $1 million this year. And therefore I'm going to pay $300,000. I better go do something about this now before it's too late. Right. And so now I'm going out and saying, okay, hey, I've got to go buy X worth of real estate in order to get cost segregation study, to get bonus depreciation in order to offset my taxes completely this year. I know that in June, I'm not doing that in December or November. Right. I can't tell you how many people I have conversations with every single year in November, December is like, oh, dude, I got a huge tax problem. You got any investments that I can come in with you in order to save that? I said, well, no, we don't have any deals right now. We just closed on a $5 million raise last month. You could have came in on that, but you weren't thinking about your tax situation, right? Because if you're paying...
I'm guilty of that sometimes where I'm like, oh, shit, it's November.
I think we've probably had a conversation before one of the past couple of years around it where, that happens. And it's just if you're planning ahead, you're doing good bookkeeping in the year that you're in, you're doing good reporting and people understand it, right? You understand it, or at least you have an advisor that understands it. They're telling you, hey, you're going to waste money and give it to the government when you could leverage that same amount of money, invest in real estate, and then save on the taxes. Now you have wealth, not a big old bill that you got to pay the government.
Yeah. So what do you recommend? Now let's talk to the investor that's making sub 1 million right now, right? So maybe they're a few years into the business and I'm talking net, like they're actually making the money. What can they do throughout the year to be proactive for their taxes? Like, what are some things? I can think of a few things that are small. Like, back in the day, we used to scramble in January to get all of our contractors W-9s. So now it's like a very strict policy in my office. No one's getting paid. And then they're getting written up now if they don't get the W-9 before we pay someone. And it still happens. So and we're a decent company with decent sized company with policies in place. We also now this is for someone probably making a little bit more money, but we pay quarterly taxes instead of waiting till the year end because I freak out at the end and I'm like, wait a second.
Yeah.
I think the government also, if you're big enough and you're listening to this, I think that eventually you need to be proactive because it'll keep them, I don't want to say away.
Well, you're required to, right? You're required to essentially be within 90%. Basically within 90%, you're supposed to be paying estimates quarterly. So a lot of, tax firms will literally, when they file your, for instance, 2023 taxes, they'll say, hey, based on your 2023 tax return, we estimate you'll make this in 2024, and therefore you need to pay this quarterly, right? For W-2 employees, it's a little bit different because your employer is withholding that and paying to the government. One thing basic that probably most people don't understand is whenever you pay those estimates, whenever even a W-2, when they withhold it, people think, oh, I'm paying government taxes. You're not. You're actually just paying estimates and they're holding it for you. So you're essentially giving the government an interest-free loan because it's not really due until it's due. Yeah. Right. And so we always tell people if you're high income W-2 and you're investing in real estate on the side, put a bunch of dependents on there so you pay less throughout the year because you don't really want to be giving the government a loan. You'd rather them be loaning you the money.
Yep.
Right. And so, but to your point, you need to be paying quarterly estimates. So a lot of people get hit all of a sudden, I owe 120 grand at the end of the year. And I don't have it. I've spent it, right? I either reinvested in the business. I went and bought my first Mercedes, whatever the heck the answer is on that money you're making. Well, now all of a sudden you owe this government a big bill. What happens is they don't have it. Therefore, they don't pay it, right? And now all of a sudden fees and interest and all of that starts to accumulate that following year. It gets bigger and bigger. Now they avoid tax return paying the next year. That's what creates the spiral, right? People start out making a bunch of money. Usually why people don't file taxes is because they owe the government money and they don't want to pay it, right? And so therefore they ignore it. That would be one of the biggest mistakes that I would say from a tax perspective specifically that happens. But I think even more importantly is folks that are in that range, newer folks in the investment that are doing well and starting to succeed, ignoring the power of understanding what is happening inside of their business to make better decisions to scale faster, right?
Yep.
Everybody plateaus. Everybody can get to that first million, right? Especially in today's society when they work at results driven, right? And they're following mentors, guidance. Look, if you join results driven, it's guaranteed. I know in fact, I've sent my team here before. You can go make, you can go do $1 million worth of deals if you follow the program all the way through, right? It's like, how do you get above and beyond that, right? How do you go way past that? How do you start building wealth in real estate? That's when people start making mistakes because they're not looking at their financials. They're not understanding how to run their business using those numbers to make the decisions.
One big thing I see pretty common is a real estate investor doesn't know what kind of CPA and firm to hire. So they'll go hire a local CPA firm that maybe doesn't necessarily focus on real estate. And so they think once they go pay the tax bill, I'll get calls every year of some students freaking out. And they think just because they're a tax preparer that they're supposed to be giving them tax advice. And it doesn't really work that way. Yeah. So what do you think the difference between a tax preparer is and a proactive tax strategist is? And are they the same people or do they need to look for a firm that does real estate specifically and it's all in one?
Yeah, I think without a doubt, right? If you can find, and some of this is cost benefit analysis and just generally people don't know who and what is out there. What I would tell you is, yes, there's a lot of buzzwords. There's fractional CFO, there's CPA. CPA is used way too much, right? A CPA can be so many things. I'm a CPA. I've been a CPA my whole life. Since I graduated college, I worked at Ernst & Young, a Big Four accounting firm. Guess what? I never did taxes, right? I know taxes really well now because I've invested and I have so much real estate. I've had to learn it the same way everybody else would have to learn it. But I'm a CPA without tax experience, right? Now, some other people come up through the same ranks and all they've ever done is tax. They're also a CPA. So it takes many, many different forms, right? It's about, to your point, asking the right questions. I think for tax firms, accounting firms, bookkeeping firms, fractional CFO services is about what do you actually need in your business today and making sure that they have experience doing that for others and make them prove it. I've got real estate experience. Well, tell me more about your real estate experience, sir. Well, I've got one client that I did 3 years ago that bought a commercial building that they owned for their business. Got it. Well, how about 150 wholesale transactions a year, and I'm going to do 36 flips, and I'm going to keep 10. Well, okay, no, I've never done any of that. Well, you're not the right person. I think it comes with anything in hiring. People early on, we all go through the same mistakes, and when you can get into the right mentorships and the right groups, you solve all this problems. There's a reason they're so successful, right? People are hiring their best friends, their cousins, all of the, like for any positions. And the back office is no different, or hiring your local firm because they're local and it's easy and you think they need to be there. The world is national now, right? Everything is done online. You can hire anyone across the country, right? So it's just as easy for you to go down the street to hire your local H&R Block to prep your taxes compared to, a real estate specific company that's out of across the country to you, right? That is what I would say is the biggest thing around. Don't do it. You've got to see what is it that you specifically need. If you need bookkeeping, reporting, advisory, and tax, we'll find a shop that has that because there's plenty of them out there, right? We do it. There's several others in the country that do it. You're already listening to this podcast for that example. So you have the right resources to be able to find those, right?
One thing I wanted to ask you is, and obviously I have you on for a reason. So if you're listening to this and you don't have a great company you're working with, then reach out to Accruity and we'll talk about that in a second. But and this isn't just about finances, this is across the board with consultants I've hired in the last 3 years, whether it's consultants or firms, whatever. And you think that just because they have experience or they're known or they have a reputation, that doesn't mean they're the right fit for whatever you're looking for.
Yeah.
And so I've been kind of amazed lately. Two things. There's a responsibility of you, the listener, that's looking for the service to set clear expectations with what you need and want. And so if you don't come to the table and say, this is exactly what I'm looking for, then don't expect it in return. So if it's a mess, it's because you probably didn't set clear expectations. On the flip side, it's also the vendor's job to come in and say, here is examples of what this will look like after we're smooth and transitioned with your finances or your whatever it is that you're looking for. And I've personally been running into this a lot actually lately, and I'm going to make a post about it soon because I'm getting pissed off dealing with it. That, a lot of people will come to me and they puff their chest because they're like, well, I've been doing this for blah, blah, blah. I'm like, I don't give a shit. Yep. I need to know, what are you going to hand me and what am I paying for? I need deliverables. What do they look like? What should I, what kind of decisions will I be able to make out of this? Give me an example. I just feel like people have gotten lackadaisical around, one, setting clear expectations with what you need and want. And then two, on the vendor side, also providing examples, making it very clear of what it looks like to work with you. What should they expect? Because if you don't, then what ends up happening in 3 months into the relationship, no one's clear on their expectations. People are upset, bad reviews, etc. And so what should they ask the firm? If they were to go to them and say, let's just talk about books, right?
Yep.
What should they say? What is a checklist or something that they should think about in that conversation to make sure that firm is the right firm for their books?
Yeah, I think naturally, the first thing is, what is your experience? Give me proof of concept. Let me see some other people you're working with that do what I do. And make sure that they understand that what it is that you do, right? If you're a wholesaler, you're a fix and flipper, you're a bare model investor, right? Okay.
So real quick, a couple years ago, we went to a firm that you know about. I'm not going to say any names. And we said, hey, we're considering moving books or bringing it in-house. And I said, show me an example of chart accounts from a client or something. And they're like, well, it's confidential. I said, well, how are you going to show me what you know how to do what you do? And so I'm like, figure it out. Go make a mock account with a bunch of expenses, go do the work and figure out how to show me this example.
Yeah. We do case studies for sure now. And we've been around about 2.5 years, right? I built a real estate portfolio, realized we can really help a lot of people across the country build a real estate portfolio. So we started the business, right? Because I used this. And so we've had our learning curves too, to your point around that. But that exact example, you can literally pull it out, put a fake name on there, show fake numbers and show it to you. It's not hard at all, right? Yeah. What we've done, which is really cool in our business, is we've instituted what we actually call an insights, where we're going to lift up the hood on a kind of a one-time fee that says, look, this is everything you have going on. Here's how to get the best in class. We'll do it for you, or you can give it to somebody else. Because a lot of times what we've learned is it depends on your specific, unique situation on the best answer. Sometimes we're not always the best answer, right? Sometimes I'll say, you need to go hire an actual CFO right now in-house to help you, advise you, and teach you because your business is that big already. Sometimes it's like, no, just hire an executive admin that sits there next to you every single day and codes your transactions because they're there, right? And then we can come over the top and review it. So I think it really depends on your situation.
Real quick on that. This helped me a lot and it'll help the viewers. So when I first got started and I was running into all those problems and that guy created fraud and took my money, the next year I went to my CPA and said, look, until I have a solution, can you train my admin on basic data entry? So I paid him, by the hour at the time or something, and she can do basic data entry now in chart of accounts. And then I paid by the hour for her to ask questions when she needed. So as she grew, and then what she would do is we'd have them put each week, anything she didn't know how to book, she'd put in an ask my accountant.
Ask my accountant. Yeah, it comes natural in QuickBooks.
Yes. So then, every couple of weeks, she would then have a 1 hour meeting with my CPA that I'd pay for. They would go through all the ask my accountant with her, and then they would teach her how to book it. And it was way better, obviously, than what I was going through. Now, today that would slow me up because I'm too big. But for those of you that are getting started, it might be a good idea to think about investing into someone, whether it's a friend, a family member, whatever, and just saying, hey, look, if you want to do my books on the side, because you're not big enough yet, maybe. But even then, you're asking for financial mistakes. And if I could go back, I probably would have outsourced this to a firm that knew what they were doing. And even if I wanted to train my admin, I would allow her the time to watch what they're doing as well and get probably even better trained.
Yeah. And I even say multiple eyes is a good thing on different things. To your point of the person stealing, right? Like if you had multiple eyes on that, likely that doesn't happen, right? They're filing your taxes, they're giving you all of the reporting, and they're doing all of the bookkeeping, which is fine. But if it's a single person, it creates a lot of risk, right? Across a firm. Like, for instance, our firm, and even, there's obviously we're a very, very small firm that specializes in one thing where there's huge firms out there. But a lot of times you have 4 or 5 different eyeballs that look at it up and down the spectrum. It's the same concept here where, right, like what is the time that you're paying yourself per hour and what can you go make? And if you're paying yourself per hour to do a less job, right, bookkeeping, right, coding transactions, you're messing up, right? And if you could have someone do those things, get your coffees, kind of put all these things into commitment. I always tell pretty much everybody that's starting out, your first hire should be a really good right hand. That's your executive assistant. They can do a little bit of everything.
You know what I thought about doing recently?
What?
So whenever somebody can't or is not maybe doing their role or whatever, and I have to step in and do it, I think I'm going to start billing the company the cost per hour. So that way we recognize, okay, my time is doing XYZ. By the way, this hour, do we all agree? I could have went and negotiated a deal with whatever. And so that way it comes out of the net profit. Like we have to come up with a system that's and it might not just be me. It might be for Chris or other,
I mean, that's a very granular way to figure out how to understand and measure inefficiencies in your time.
I think it would be
in your team.
And put it as fake, whatever you call it, transactions in the bookkeeping.
Yeah.
I'm this would have been the impact.
Yeah. I'm wasting X amount of my time doing this because somebody is messing something up somewhere, right? Obviously, you guys do so much training and different things like that, which is built into your model and your highest and best use in order to scale. But to your point, if you got to go in and fix issues that shouldn't have happened in the first place, yeah, right. It's costing your company a huge amount of money. Now, obviously, you're developing talent. Hopefully, they're not doing that thing again, right? Whatever it is. Now we know that.
Yeah, I thought it would be one little exercise because we joke around about it now where we're what's my time worth? Joking around. So we all challenge each other on that.
I mean, I live to that. I try to live to that as religiously as I can in terms of don't do things I don't need to do. And, the real challenge becomes it's just easier for me to do it. We all say it so often. It's just easier for me to get it done, right? But that's not going to create the ultimate empire that we all want to build and be sitting on top when we want to be it. Perfect. City Life Residential, my real estate company, right? We've got, close to $125 million in assets right now, right? That we own and have. Guess where I sit in there? I'm not even on payroll anymore. I don't even sit. We run on EOS. I don't even sit in our L10s anymore. I don't even go to the quarterlies. I literally sit on top in the owner's box now, and I've been able to do that. We're 6 years old. I'm over here running the Acruity company. I'm over here running the capital business, right? Because what I was able to understand is exactly that. What is the cost per my time, and how do I invest my time into developing other people to do all of the work as I slowly progressed? We started as 2 people in a chair, right, in an office, and we did our first deal. This was 6 years ago. Now I'm literally have a team of, close to 40 people doing everything inside the business, and I do nothing. I'm not even on payroll anymore because that exact tactic of being religious to what is my cost per hour and how do I get to my highest and best use? And no matter what, don't be doing things that are below my cost. It's not an ego thing. It's
No, I mean, ultimately, it's how you provide more and more opportunity, right? And so it has nothing to do with ego. It's, hey, if I can go spend my time doing this, now I create more opportunity, more ability to pay more, all these things for the company.
And to your point, like the whole pod is around understanding your financials. We would never ever been able to do that if I didn't understand. Look, if I bring this person in to do this job, right, lease or handle maintenance requests, right, all of the different things that go involved with a real estate portfolio. If I just did it based on a bank account, I don't think I'd ever said yes, and I probably would have never hired anybody. Right. But it's like if I bring this person in at this $80,000 annual year salary for this specific position, what opportunity is that going to create for this business and growth? And when will that money come back? Okay, well, it's not 80 grand. I'm not spending 80 grand on a person. Right. I'm probably spending $9,000 a month in total, including benefits and everything else. Well, if I get this person doing all of these things for $9,000 a month, what more can the business create and do above and beyond the 9 grand? That's the evaluation we need to make. Is that worth it or not? And if the answer is yes, then we do it all day. And so we're hiring today knowing, hey, look, in 3 months, today it doesn't make any sense, right? But in 3 months, the investment of 27 grand over the next 3 months is now going to create this return in infinity and beyond, meaning in perpetuity as we scale the business. We would never be able to do that if we didn't really understand our financials and saying, what are we actually going to make if we project, hey, bring this person here, we'll create X in revenue in the future, put it on paper, see it, to give us, to your point, clarity and confidence to say, look, I could hire that person. I might hire the wrong person. Therefore, I get rid of them and bring somebody new in. That's a whole different conversation, not for today, right, on culture and everything else. But I know that position in 3 months will create me this amount of money in revenue. It's the same as lead gen spend in marketing. Why would I not do it? And oh, by the way, it gets me doing something less of what I hate to do. It gets me, right? Our job is to get us to our highest and best use, which I tell everybody is whatever it is that you love to do. We're never ultimately going to always ever get there. But the more you're doing that, that's the more money you're going to make because you're enjoying yourself more. You're fired up to go to work every day, et cetera, right? And don't be fooled because that person wants that job, right? That's where they want to be. And that's where they're fired up to come to work every day. And that's our goal, to find that person. Because now, you're spending the 80 grand a year, right? But they're bringing you $300,000, $400,000, $500,000 in wealth over time, or equity in the business, whatever it is, depending on how you measure that. That's another big thing we don't typically measure in these businesses and real estate is what's the equity value of the company, right? And what can I sell it for? And the real money multiplier, right, is in business enterprise value.
Yep.
Which I'm sure we'll talk about a different day, probably not for today, but.
So let's allow the listeners to learn a little bit more about Accruity.
Okay.
So I think it was a big eye-opener to me when we did that survey last week with our student base of the sheer percentage of, one, people that don't have books updated, and then two, the people that did file taxes but don't have their books updated, which is another massive mistake. And then how many people have just simply not paid their taxes in 3 years. So if that resonates with any of you guys listening to this, I want you to go over what Accruity has to offer and who is the right avatar for Accruity.
Yeah. So, first and foremost, we're a full service accounting and tax company specializing in real estate, right? Folks that are buying a ton of properties, holding them. We're really good at the HUD bookings, the balance sheet side of everything that real estate companies are doing, which then lends itself into the service business side. Any service business that you're in within real estate, whether it's construction, wholesaling, fix and flipping, which isn't really service, right? That's the investment side, right? Taking it down, but lending, all of the areas that involve the real estate side, we're full service, one-stop shop. Really, the goal that we had in mind was, look, we were able to scale our real estate portfolio really fast because we had a really deep knowledge and understanding of accounting, how to do it, how to read it, and how to use it in order to grow the business, right? And so we realized, once we started going across the country, realizing there's a lot of people in this country that don't have that. And they're struggling enough because we realized how hard it was to struggle the sales side of the business, right? The operational side of the business is hard enough, especially for new entrepreneurs, especially for entrepreneurs that don't come from corporate America, right? And so we said, let's help them. We could be a one-stop shop for their entire back office so they can focus more on running the business and then use us as a tool to understand the financial side and act as a fractional CFO on down through a daily bookkeeper. So we do all of those things for our client. And then it's really a mix and match depending on what they need, right? Because most folks that come to us already have Johnny, the local CPA that they really like and they refuse to get rid of because Johnny's married to their sister, right? Or they have their admin that's already doing a lot of the daily bookkeeping. Really where we can come in then is on a controllership side. Cool, we'll oversee them, we'll close your books, we'll get you really good reporting, we'll get you good KPI dashboards, and then we'll teach you how to use those to run your business if you need it, right? And so what we've tried to do is really create a company that can cater to the clients in the space that we're already in and what we're doing. The really cool thing that we learned over the last 2 years is it's really hard to scope a client. To your point in some of the earlier conversations where a client comes in and it takes 6 months to get them cleaned, they don't know what they paid for. They're 6 months in, a bunch of money in, and all of this work is gotten done, and they don't actually know what was done, right? And it creates this massive frustration. The other side of it is we would bring clients on, we'd go 6 months, we'd get a little bit of progress, and then they would go dark for 2 months, right? We can't get a hold of them. We call them 12 times. We email them. They're just gone, right? Because they have no one on their side. They're out there selling. They ignore this again, right? And so what we've really created is a first-time product where we're calling Accruity Insights. Is like, look, let us come in and understand and lift up the hood of your business to see how bad you really are. Promise we sign NDAs. We don't tell anybody about your business. It's all completely between us and you. And we say, look, here's where you're at today. Here's where you should be at today. Here's what you need to do, right? It goes all the way from entity scoping and creation, meaning are you set up the right way? Do you have the right entities in place? Do we need to change that? Where are you growing? Are you buying more properties? What does that structure need to look like? Tax assessment, right? Like, are you losing a bunch of money on the tax side because your tax accountant's an idiot, right? Whatever that might look like. We do a full-blown tax assessment. You haven't paid taxes in 3 years? Okay, crap. Let's figure this out for you and see how bad it is, right? Some people haven't done their books and they have 14,000 transactions they need coded. We can do all of that work for them, right? But we come in and say, look, for a one-time fee. And the other thing is that we've learned, it's like there's a huge trust factor in this game, right? Like, to your point, you literally had your person you were supposed to trust the most stealing from you. And so we've learned that where, hey, I might not want to get in bed with you for the next 3 years. And we've learned, okay, no problem. Let us set you up with exactly what it needs to look like. And if you love that and like us, then cool, we'll keep working with you, right? We'll build it. And so we have an Insights where we do all of that work, and then we'll give you a price on what it's going to take to build you best-in-class back office. Or, right, we have a conversation with you. Maybe you don't want best-in-class yet because you're not big enough and you can't afford it yet, and you don't trust your investment skills enough yet in terms of making that investment and doing that work until you sell more. Well, maybe you just want bookkeeping and basic financial reports so that you're up to date. Cool. We'll do that moving forward for you. And so then we move you into build and then ultimately retain where you can scale your company without having to use us. The core avatar clients are really folks in the real estate space that want to scale their business, that don't have a back office right now or don't have people that they trust managing their financials, telling them exactly what it is that they have going on in their business through reporting, through KPI dashboarding, through budgeting, through forecasting. And again, it takes time. I tell everybody it takes a lot of time to get there. So if you start now, some clients, depending on how effed up you are, if you will, it might take a year to really get you all the way to humming forecasts, right? Depending on how much you want to spend. Now, if you pay enough money and say, I want it done in 3 months, it's a totally different story, right? But you also want trends. How important are trends to you in your business? Wildly important, right? And so you've got to create trends. Well, if you've never had anything, we've got to start getting trends of months. So let's start, this month, next month, the following month. Do you want us to go back? How long do you want us to go back to create those things? We're doing all of that for clients, right? Depending on what it is that they need. The key is if you don't have really good financial systems set up, meaning you don't have someone getting you said weekly, we do that for every single client. It's weekly bookkeeping. We believe in the exact same thing you believe in there, right? Weekly bookkeeping where they're getting that, where you can go in and actually look, right? We're in your systems. So where you can go in and actually learn, and we'll teach you how to do that, right? That's what's needed. If you don't have that, you're setting yourself up for fail. The next piece off of that really is getting monthly reporting to understand the money you made on a per month basis, what you owe, what your assets look like, what's your net wealth. Every single month, you should understand what your net wealth is doing. I know right now, I think it's up to $74,000 now a month, every single month that I'm paying down in principal mortgage payments, not interest. It'd be like $500,000 a month in interest, right? But in mortgage principal alone. So I know every single month we're getting $75,000 richer on paper. Well, that's really important because every time I go to a bank, I need to take advantage of that, right? So getting those reports and understanding your net wealth, understanding if you have a portfolio, right? What is your debt service coverage ratios every single month? What are you making above and beyond your debt payments? And understanding that every single month. What's your wealth? What's your return on your equity, right? If you have a property worth $300,000 and you owe $150,000 on it, you have $150,000 in equity. Let's say it's going to cost you 20% to sell it. I round it up, right? So you'll make 120, you can make 120 grand, right? Well, what are you making on a monthly basis, and how long would it take you to make the 120 grand back? Right? Well, let's do the math. Is it a number? Is it 3 years? Is it 7 years? Is it 22 years? Well, if it's 22 years, sell the property, get the money, right? And then reinvest it back in. And so we do analyses like that for our clients, depending on how sophisticated their things are, right? It just takes time, because if you don't even booking your transactions on a monthly basis, you're not getting your basic reports, it's very difficult to go then do the analyses like that to say, look, what is a return on equity on these properties? But for instance, in my portfolio, we have 950 units. We're doing that, right? What is our net equity? What is the return on the net equity that we're making every single month? And can we sell it? Right. And so we're analyzing our portfolio on a monthly basis to understand those things. Well, that's then what we're doing for other clients.
Look at my portfolio right after this podcast.
Okay. Yeah. I mean, that's the key though, right? Because there's people always talk about, and then obviously there's the wealth building side of it, where you might just want to keep the wealth, build it over time. You don't necessarily need the cash because you're killing it in your other games, right? The other businesses that you're running and things. And it's like, no, because obviously that equity is also gaining equity. Well, you can bake that into the calc too, right? Maybe it's appreciation 7%. Well, I'm earning another 7% above and beyond. So you just bake that into calculation, right? Is it still worth it or not? So, but we can do all of those things for our clients.
Man, that was a long list.
Yes.
All right. Well, if you're listening to this, I am going to go ahead and drop a link in the show notes to be able to reach out to Accruity. And I'm assuming you guys probably do like some type of consultation call.
Yeah, absolutely. We got on this, free discovery, 1 hour consultation discovery calls, learn about your business. A lot of times we end up adding a ton of value on those. Yep. So even if you don't want to move forward, it's worth it, yeah. Right? But we couldn't run business without doing that anyways, right? We need to understand what's going on. And obviously if it works, we'll roll you into an insights package where we kind of dive underneath the hood completely. That's a one-time fee, right? Generally speaking, it's a loss leader for us. For those of you who don't know what a loss leader is, think about the money you're spending to acquire your customers today in your real estate business. It's the same concept for us, right? Where it's like, look, we want to win your business for the next 10 years. We want to be your back office. And so therefore we're willing to kind of assess everything you have going on at our cost, if you will, in order to do that. So.
Awesome. Well, thanks for joining me today. I hope that all of the listeners today, if you are behind on books, you haven't filed your taxes, or you filed your taxes and your books are behind, please see the link in the show notes. And until next time, keep crushing it.
Let's go.